Good day everyone, we're beginning the stream slightly early because we hadn't had it on the schedule for a long time. It's more a spontaneous one and kind of if you know that on Fridays I'll pop at 12 GMT, you most likely were waiting already on the channel. But we're still not publishing the full schedule for the clients in general. Someone who requests it can get it. It's always made on Fridays, a whole week schedule for the webinars, but usually everything is at the same time. So today I'm doing one of my short 10-minute intro streams explaining some sort of certain aspect, and today we're gonna be returning to a very old topic. It's basically a publication of Thursday 5th July last year. This is a Wizzy's article, by the way, Introduction to Basic Chart Patterns, and this is the name of our today's web stream, and I'm gonna be looking at them and showing some examples on chart. We're gonna go through the article, kind of explain the most basic things, and then we'll go to the JForex platform and take a look a little bit at some examples, and I'll show you how it's actually done practically, just simply. Basics of chart pattern is that when you get, they are mostly used to illustrate something. When you get better, you usually just see them with your eyes. You don't need to draw any trends or etc. You just see it. So we got channels. We got channels up or down, of course. And the thing about the channel is that it just shows the trend, and the channel shows the borders of that trend's volatility. Each trend, a move up or down on any kind of scale that you have, has smaller moves in it. For example, Elliott wave theory guys will know this better, how the waves move. And the thing is that you got that pattern, and the simple channel shows the borders of it. If it suddenly breaks out of it, it breaks it. That's simple. All channels are broken. They just show one move at a certain time frame, certain scale. But if you can spot the channel pretty early, you can follow it and take it into account that it exists there, and be careful around when a pattern, for example a rate, reaches a pattern's kind of lower or upper trend line. For example, here these are all charts actually from May, and it's a simple pound USD 1 hour asking price. Wizzy just drew simple two examples. Simple, just a channel, nothing much there. Although there are details in this pattern and all other patterns how you draw them. You can use high and low prices, like here he was using it, and you can kind of use the closing and opening of the candles. Those are two methods. However, from experience I can tell that people use both, and sometimes even drawing both and having both on the same chart can help you out. By the way, here you can see that that pattern was broken at the end, and you can see how it occurs. See, the support was working here. The rate was being supported by the trend line. It was standing there, and people are watching. Okay, it's not gonna kind of break out. It should go up. Some buying was occurring, but eventually the sellers overpowered the buyers, and it went downwards. That's how it happens. So that's the basics on the channel. Then we got wedges. Personally, I hate wedges. I don't like them. I think that wedges are being drawn by someone who cannot see a trend and cannot see a channel. For example, this even example, EURUSD. I can see clearly. You can draw a line around here and a line around here, and you can see that there is a channel. There was a previous channel here. But some make wedges. Wedges, just like, have something in common with the triangles that you will also see. And wedges kind of show you a trend moving somewhere, but the market is kind of coming to an agreement on the price, in regards that they are starting to trade around the same price in the same direction, and it's starting to squeeze in. It's getting squeezed in. The volatility decreases in the move. It has a direction, but it's getting squeezed in. And at one point, they kind of come to this consensus. The buyers and sellers, some bounce out. They already have their positions. They see that it's going out, but at a certain moment it gets squeezed in and breaks out. And there are usually sharp moves at the moment. In this example, this is a good example, by the way, because you can see that the change that occurred after it was finally clear that it's breaking out of the pattern, there was an increase of volatility. Not volatility, but the move was very sharp. It was just going downwards, 1 2 3 in 6 hours it was just plummeting. And it quite often happens when a pattern is broken. You know that it's clearly broken. It's signaling to a lot of people to be buying or selling, and there's that short-term move occurring, and the markets react. Some are just closing their positions because it changes their setup. Some were expecting it and are taking advantage. The situations are very various. Then we got a descending. By the way, they're ascending, descending wedges, and they're also kind of can be symmetrical. Some call them symmetrical, but I think the symmetrical are just triangles. We'll get to the triangle next. So here you can see a descending wedge. I would actually increase that line to have here, because I can see that these 2 points are also part of this. Then you got this momentum, and you have 2 channels here. But in general, on any pad, you can just turn it into a Picasso and draw all the. Usually, for one setup, I would suggest 3 up to 5 patterns. See the situation, and kind of you can already make a setup, a trade strategy and all that. But I know some people just sit on the chart on all the time frames and keep drawing, adding, and by the end they are done. It looks like more like an art piece with a center on the time frame and the period where they were watching it. It looks like kind of this ball with many sharp spikes. That's how such kind of chart looks when you add as many as you can, but basic patterns. It's a separate kind of thing. If you are interested into that, I can actually just show you later on, if someone will ask in the comments, of course. So, and the triangle, the thing about triangles, yeah, it's a triangle. It just ends it there, and it's connected. These examples, well, actually, they're quite bad. They most likely were showing something on a larger scale, but usually the triangle you have, the best triangles are on the USD ruble. And I will find that article. See, this is a good example. That was the Swiss franc. See, this is a descending triangle. You have a strong support. The rate doesn't fall below something. There might be various reasons. It just doesn't fall below a certain exchange rate, and it just keeps pushing into it, and it goes up and down, and you have a triangle. The rate just bounces around here. And the thing is that what happens is one moment it breaks out to the upside or to the downside. A good example actually would be for a ascending triangle, where you have a resistance, certain horizontal resistance holding, and all the supports keep bouncing, and eventually they go up, but then it breaks out to the upside or to the downside, depending on the final pressure. So the example that I might actually say to you is the Chinese yuan. The government keeps the rate at a certain level. So we're going to be going here a little bit off topic, because I remembered about the USD ruble, and for that I'm gonna need a chart. I'll just get any online chart, although let's go to JForex. JForex will be better. So I'll add another one. This is not scripted. I didn't think about it. I kind of just remembered. So we'll go to the 1-day chart of the USD ruble. Zoom out, get the data, load it, everything. Let's wait. I kind of actually asked too much. I need just 2014. The war in Ukraine, all that. Okay, so we're here essentially. So these are the moves that happen. We have all the political turmoil, sanctions on Russia, Russian ruble just losing, recovering, losing, and all that. So afterwards, what was happening is, you see these chart moves. We were watching them, and we saw. Sorry, pick the channel. And what we saw is, see, horizontal, some sort of something like this. See, 3 points of reference, 1, 2, 3. That's very strong. That's triangle. It's kind of being propped up upwards. The ruble isn't allowed to fall below this level by someone, but it's kind of going down eventually. A channel goes here. By the way, if you would be adding channels here, this momentum goes here. See, for a channel you need around 2 points on each side for it to be considered kind of okay. But I sometimes draw what I call speculative channels, where I just set 2 points on one side and 1 on another, and I kind of already use it. But here we have 1, 2, 3, and the previous high levels are also consistent with it. And you got here 1, 2, 3 resistance levels. So this is a move inside. Remember, you can have all of them simultaneously. There are simultaneously various things occurring on charts. Here we have another move, and this is how in general a triangle would look like. It has moves in the borders of it, but it's squeezed in it. And when it gets to that point where you see it's getting squeezed in here, buyers try to push it out. The resistance works. The sellers go and eventually then it breaks out. It gets out of it fully. And look what happens. Immediate bounce. But this move of a triangle is caused by another set of sanctions. And see what happens afterwards. The market info goes into, everyone understands, okay, the Russians are doing bad with this thing, their currency is going down, it goes up, and then the market starts searching for the new equilibrium after the new information is there. And what happens is they search for a consensus price with another triangle. That was what's happening, and we were watching at the time. And what happened? Another event finally pushes it out of it. Below that, after something happens, you have this big range going on. The market is searching. So what's with the info that we have in the current economic situation, the right price at the moment? And it starts moving like that. And then, boom, some new info pushes it outwards. And at the moment, by the way, we have these large fundamental moves around here. By the way, with the ruble, that whole pressuring of it, I had this up for months and used it to make forecasts. See, 1, 2, 3, strongly holding here. You got a triangle in the borders of a channel that was caused by the bounce out of a previous triangle. It already sounds complicated. So you got this bounce out here, and here at the moment we have a change in the fundamentals that have caused this move down. It's already getting kind of complicated. Well, imagine if I'm not doing this on the daily. Imagine that I started from the weekly. I start on the weekly, but on the weekly for something like to use the ruble is bad. So I'm watching, imagine, the daily, which shows mostly politics and stuff like that. Then I kind of zoom in, I go on the 4 hour, and I start drawing additional patterns on the 4 hour. I do the same. Then I continue drawing on the 1 hour. And eventually what's going to be happening, you just get confused. You don't know really what's going on. But there was a fundamental drop there, and there was a descent like this, which was just recently broken. But you have a situation. This is a speculative one. See, it has a confirmed support, but I have only 1 point for the resistance. But I can use it as a guide, for example, thinking that if I'm making a strategy of a surge, I got these previous low levels, confirms the resistance, another speculative pattern. Here I'm using those supports, and this is how I set it up. This is actually a legit setup. Only the kind of stop loss pretty far away. So this is how you use basic patterns. And they show these moves. Remember, they just show a move, and you have to remember some basic things about all patterns. They're all broken. At one point of a moment, new information comes into the market. People find out something new, and these things are broken. They will get broken. They will move, and they will change what they are doing, and it's gonna all crash. But you can ride this one wave, it crashes. Then you get to another wave, it crashes. You get on another wave, it crashes. And you just go from one another, and it's more about actually managing your risk, knowing what will happen with your positions when it crashes then actually. But we have these patterns on our all basic charts, all the charts that you have, the daily technical analysis that we publish, and all the other things that are around here. Usually they are there because they show these moves and they help you to show what was happening to someone else. A pro guy usually just would be looking at this. Okay, I'm seeing a triangle here. Yeah, there was momentum going here, break out. The guy just sees it simply. Doesn't need to draw, it takes up time. So I think that checking the chat, no questions. So if you have questions any about patterns in the future, then ask in the comments. By the way, a good material is gonna give credit to Investopedia. On other patterns you have them here, technical analysis material from Investopedia by Justin Kuiper, I hope I read that right, and there's 9 parties chart patterns. He's using some kind of other popular patterns. You got the head and shoulders, cup and handle, I don't like this. Double tops and bottoms are the reversal patterns. You just have one resistance line holding. I kind of don't think that's a pattern, and he has triangles. And you can read about them. Flags and pennants, smart name for the same wedges. Then you got wedges, of course, capped. Yeah, read about it all, and that's it. I made this short tutorial, and I'll see you actually in somewhere around an hour. We got the Canadians releasing their employment data, unemployment change, and I can already tell you and show you that the historical moves on the USD CAD have been from 35 to more than 80 pips. Only this will be the biggest sudden move on the charts this week. So I'll see you later.